Is Bitcoin mining still worth it in 2025? This question is, more complex than ever before. For some, the answer is a clear yes. For others, it is a definite no. The truth is not simple. It depends entirely on your specific circumstances. Your access to cheap electricity is the most critical factor. Your ability to acquire efficient hardware is another. The scale of your operation also plays a huge role. Ultimately, profitability today is a game of thin margins. It rewards those who plan meticulously and control expenses with extreme discipline. The landscape has changed dramatically since Bitcoin's early days. What was once a hobby for tech enthusiasts with a home computer, has now become a global, industrial-scale industry. Giant, publicly traded companies operate massive data centers. These facilities are filled with thousands of specialized machines, placed where energy is cheapest. Intense competition has raised the bar, making it harder for small participants. The days of easy rewards are long gone. Miners secure the network with proof of work, validating transactions and earning block rewards plus fees, the incentive that keeps Bitcoin decentralized and trustless. The profitability of Bitcoin mining boils down to a simple formula. Your revenue must be greater than your costs. Revenue comes from two things: the Bitcoin you earn and the price when you sell it. How much you earn depends on your hash rate, your hardware's computational power, and the total network hash rate. As more miners join, difficulty increases, so your share of rewards shrinks. The single largest expense is electricity. ASIC miners are extremely power hungry and run 24/7. Paying double per kilowatt hour can erase profits. Finding cheap, reliable power is the top priority. High-end ASICs cost thousands and improve quickly, becoming outdated in 18 to 24 months. You must account for depreciation and upgrade capex. Older units are cheaper upfront but less efficient, and higher electricity bills can erase profits. Cooling and ventilation are necessary. Noise is a major issue for home miners. Large farms pay for industrial space and security, plus stable internet and staff. Most miners join pools to smooth earnings. Pools take about 1 to 2%. The hobbyist or small-scale miner faces headwinds, higher residential electricity rates. One 3,500 watt machine at $0.15 per kilowatt hour costs about $378 per month in electricity alone. Suppose you buy a $5,000 ASIC. Monthly electricity is $300 plus $50 in other costs, total $350. At 0.008 Bitcoin per month and $70,000 BTC, revenue is $560, profit $210. If BTC drops to $40,000, revenue is $320, now you're losing $30. Industrial operations run on economies of scale. They secure sub-$0.05 power, buy hardware by the thousands, and design for optimal airflow and uptime. The same machine might cost them about $100 a month in electricity instead of $378, staying profitable when small miners shut down. Profitability is never guaranteed. Price volatility is the greatest risk. A sudden 30% drop can flip profit to loss. Bills are due in fiat regardless. Regulations can change overnight, bans, taxes, environmental rules. ASIC tech advances fast. Bitmain and MicroBT keep pushing efficiency. Older models can become unprofitable. Hardware failure, outages, cooling issues, and supply chain delays happen. Good miners manage risk with spares and contingency plans. So, is Bitcoin mining still worth it in 2025? The answer depends on who you are. For the average person or hobbyist at home, it's unlikely to be profitable. Residential electricity and competitive hardware costs are too high, but as an educational experience, it can be worthwhile if you accept a small loss as tuition. For a small business or serious individual, the path is narrow and requires careful planning. Profit demands significantly below average electricity, perhaps under $0.07 per kilowatt hour, or unique energy sources. Model costs and revenues with conservative price and difficulty assumptions. Hardware, depreciated over 2 years from a $5,000 rig, is about $208 per month. Electricity for a 3.5 kilowatt machine at 0.06 per kilowatt hour is about $151. Pool and other costs around $20. Total roughly $379 per month. At $70,000, revenue $560, profit $181. At $45,000, revenue $360, loss $19. Price is the most powerful variable. Be prepared for losses. Large, well-capitalized operators with wholesale power, bulk hardware, and efficient facilities will keep dominating. For them, it's about optimization and scale. Before you invest a single dollar, run your own numbers. Use your actual electricity rate and current hardware prices. The math will give you the truest answer.